I recently read an article that was concerning to me about the estate planning implications within Biden's recently what they consider a green book. And so, what I want to do is kind of go through a little bit of the article. We're not going to go through the whole article, but I just wanted to make aware of what is being considered, written, and put into in place. So you go seek your professional advice that you need, whether it's your tax attorney, your estate attorney, or whoever you have with regards to your estate planning. This is very, very serious changes that are being made, and it really needs to be looked at. Again, this goes back through our economic termites and looking at laws and regulations and how they're changing and affecting us, and when that's going to affect taxes and your legacy and what you're able to give back. So let's take a look at this. The estate planning implications with what's the Green Book? Well, basically, it's a revenue raising proposal that's going to the Treasury Department. It's a general explanation of the administration's fiscal year 2022 revenue proposals. They call it a Green Book. Okay. Now, here's the thing. For estate planners, the proposal were interesting both for what was included and what wasn't. The Biden administration isn't proposing reducing the estate and gift tax exemption as had been anticipated after the election, or for that matter, making any changes to the transfer tax regime. However, I think what's being proposed is even worse. It's proposing to make death, lifetime giving, and exceeding maximum holding periods for assets in trust recognition events for income tax purposes. That is significant. If this proposal comes to fruition, gifts and bequests would be subject to not just one tax regime, but two. Okay, which would have a dramatic impact on estate planning for high net worth individuals. Let's consider some of these key proposals. Layering income taxes on top of transfer taxes. That's that two issues. President Biden's primary plan for taxing high net worth families' estate planning structures is by making death, lifetime gifts, and exceeding maximum holding periods for assets in trust recognition events for income tax purposes. The resulting income tax would be in addition to the potential gift, estate, and generation skipping transfer taxes that may be imposed. So, this isn't the first time this occurred. One of the things we have heard is that this Biden's administration is just a continuation of the Obama administration. And back in Obama's administration, they brought this up in the 2015 State of the Union address. Generally, eliminating step up in tax basis under Revenue Code Section 1014. Now, this is also interesting is that the spousals, this is good. So there are certain exemptions to this rule, such as there is $100,000 per person exclusion from capital gains, as well as the $250,000 exclusion per person for gain recognition on the transfer of principal residence. So that those are staying put. Spouses that received property would have the basis of the donor spouse carried over. Okay, so that's good. So a spouse would have that. And transfer to charity would be exempt from the tax. This proposal also allows these exclusions to be portable to the surviving spouse in a similar fashion to portability for the federal estate tax exemption. Okay, so it goes on and talks about Obama's plan, and then most concerning is that the legislation would be retroactive to January 1st, 2021, which is kind of what we thought would happen with some of the other tax changes regarding cap gains and that sort of stuff would be retroactive to the beginning of the year. But some of the changes are being retroactive to April. Some will be won't be retroactive. They'll be effective as of the first of the year. So this is very concerning. The article is going to be attached. So take a look at that. And so just another something, guys.